Hi, and welcome to my channel. For those of you new, my name's Dave and I work in financial services, and these videos are a mixture of my journey and development towards financial freedom, about financial products, and also about improving your financial well-being, so hopefully you can reach your aims and financial goals sometime in the future. And remember, if you like the videos, smash the like button, subscribe to this channel so we can grow or reach a wider audience. Now let's get into this latest video. So this latest video is about my stocks and shares ISA account during the month of January 2022. Somewhat turbulent month, but quite pleased because it's hopefully a short-term blip. So the start of the year, we had a value of £59,722. The end of the month, the value was £57,113. A loss during the month of £2,609. Monthly return of minus 3.02%. But when we look at the S&P as an example, down 8% for the year to date. Tech stocks down 11-12% for the month. So fared somewhat better, mainly because we're so UK solely based. The aim of the plan for the portfolio for this year, for 2022, is an annual return of 10%, annual dividends of £1,200, and a year-end value of £80,000. Now, we've made contribution of the month, £500. Moving forward, we aim to make contributions of a similar amount in February and March, and it will hopefully, for the first time ever, reach our full ISA allowance of £20,000 for the tax year, and then from April onwards, we're hoping to put in round about £1,000 a month. So hopefully with dividends, growth, contributions, will the portfolio go from £60,000 to £80,000 at the end of the year. During the month we received no dividends, but I said £1,200 average of a month, £100 a month. We'll have good months, we will have bad months. And with regard to portfolio, we're only going to record the dividends from our shares. And across our 9 shares we hold, average yield of 3.23%. We will receive a dividend from our funds, but they will be automatically reinvested into the companies, so we will not be recording them as part of our dividend growth. Our platform provider has charged us monthly fees of £11.11. And if we look at the portfolio, predominantly based in the UK, 61.32% in the UK, 23.24% in the Americas, and 15.44% in Asia. If we look at the shares, we've got 9 shares, 5 in profit, 4 in loss, and our shares make up 43.93% of our portfolio, of which 40% is in the FTSE 100 and 3.5% is in the FTSE 250. Total shareholdings worth £25,088. To the sectors of the following graph, mainly based across banks, financials and insurance companies. Probably only our biggest market hold at the moment, but they were bought for hopefully greater recovery in the UK. All good, solid, long-term companies have struggled the past few years, but hopefully moving forwards, dividends will be increased and dividends will grow, and it will all be reinvested back into those individual shares. So if we look at the following chart, a quick overview of the shareholdings. Our largest shareholding is Lloyds Bank. We own 13,500 shares, £6,891, 12% of our portfolio. Our next holding is Legal & General, 1,602 shares, £4,600, 8.5% of our portfolio, but it does give a very good yield, currently above 6%. Our next holding is Aviva, 944 shares, £4,100, 7% of our portfolio, but again a very good yield of 5%. Has been under some pressure recently from a recent activist. It will be doing a share buyback and hopefully will be increasing dividends, and who knows, hopefully a special dividend. but safe, secure insurance company across numerous sectors: household, motor, life, and pensions. All good quality companies, but very cash rich. Our next holding is Barclays Bank, 1,479 shares, £2,900, 5% of our portfolio. Again, very good sentiment with the banking sector moving forwards. Hopefully dividends will be increased and it will be Youinvest, but ultimately a long-term player. Our next holding is Sainsbury's, the retailer. We own 788 shares, £2,300, 4% of our portfolio. Did have a very good year in 2021 because of Tesco's, because of the Morrison's takeover. Who knows what will happen in 2022? Will it be subject to a takeover itself? But everybody needs food, everyone needs to eat, and it did have very good trading figures over the Christmas period. Our next holding is HSBC, diversified away from UK banks, 231 shares, £1,218, 2% of our portfolio. It was paying quarterly dividends in the past, will hopefully reinstate quarterly dividends, but a very good global bank. Our next shareholding has somewhat struggled the last 12-18 months of the COVID. It's Card Factory, the retailer. 1,997 shares, 12% or £1,200, 2% of our portfolio. And we did actually top up an extra £500 of shares during the month. Very good results over Christmas. Debt has been drastically reduced. Still got some debt issues moving forwards, but hopefully when the restrictions are lifted and dividends can be resumed, it is very cash rich, and hopefully the special dividends will be improved. But it does have a great high street presence. It has actually opened more shops on the high street, and obviously retail parks, forecourts, etc. So it is expanding, but it was a very cash rich company pre-COVID. We've also topped up the following shareholding as well: NatWest, the bank, another £500 during the month, and we now own 445 shares, £1,100, nearly 2% of our portfolio. But again, it was bought because of the banking sector. Government still own a large stake, but hopefully during the year that will be reduced, the shackles will be off, and it will give you a much greater free rein to increase dividends. Now, hopefully with the banking sectors, as we've seen, interest rates have improved, or they've gone up from the Bank of England. They may well increase 3 to 4 times this year, but hopefully as a result, the banking margins will increase and it will create better profits for the banks, and ultimately a greater return in dividends to shareholders. And then finally, our smallest shareholding is AJ Bell, the platform provider. We currently own 237 shares. Initial price was for £1,000, now it's £800, makes up 1.4% of our portfolio. Has struggled somewhat, but the results were very good. It's got a lot of new customers, a lot of assets under management, and it is growing. It is very cash rich, and it is actually paying a special dividend and a normal dividend at the start of February. So a quick overview of shares: some good shares, some bad shares, 5 in profit, 4 in loss, but it makes up 44% of our portfolio, and all good long-term quality shares. And as we've said, we've actually increased 2 of our holdings within the current month because they took recent downturns during the month, and we've seen it as a good buying opportunity for the long-term holding, and hopefully it will give our objectives to give us annual dividends of £1,200 during this year. Now, if we look at the funds within our portfolio, just a quick overview. At the moment, we own 13 funds. 10 are in profit, 3 are in loss. Makes up 56% of our portfolio, £31,987, and it was down from 61% in the month, mainly because tech stocks, US stocks, have had a dramatic month. As I said, S&P FTSE is down 8%, tech funds down 11%. But we did actually sell one of our shareholdings we sold the UK smaller companies, give us money of £2,500, which we put back into other holdings. One, to diversify because we did have several small caps funds and we were not happy with how this fund was performing. So during the month, we actually topped up 2 holdings. We put £500 into a passive adventures fund, which we already own, and we put £1,000 into our tech fund because obviously the recent downturn in the month, we've seen it as a good buying opportunity to increase our existing fund holding for a long-term buy. Hopefully the tech and America is a short-term blip. The techs and the FANGs are very cash rich. They've got great market presence in the US because of the size of the companies, and hopefully that growth will carry for the next few years and it will give us some greater returns. Now, if we look at the following funds, I'm not going to go through all 13 funds, but just a quick overview. Our largest fund is the technology fund, £4,900, 8% of our portfolio, has given us a profit of 40% since we bought it, but during the month, we've actually lost 12%. Our next holding is a recent purchase or top up, is a passive adventures fund, £4,100. It was bought for diversification. It would mainly include trackers across certain companies, but it makes up 7% of our portfolio and it's a 10% profit. Our next holding is a global equity fund, £3,800, nearly 7% of our portfolio, a profit of 9%, but during the month it's actually reduced by 20% in the month of January. Our next holding has somewhat struggled the last 6 to 12 months is a China fund, £3,200, 5% of our portfolio, a loss of 18%, mainly through the last 12 months, but ultimately China will be a long-term hold, it will be a long-term player, and they all think it will obviously take over America in the coming years, but it has been affected by events and sentiment during the last 6 to 12 months and political tensions, shall we say. Our next holding is slightly selective, it's a positive change. Small holding of about 30 core funds, has shown a loss in the month, but the value of the fund is £3,200, 5% of our portfolio, and a profit since we bought it of 10%. And another fund we own has been hampered during the month is a US smaller companies, £3,100, 5% of our portfolio, a profit of 8%, but just like the tech stocks, it's down 10% during the month of January. And our next largest fund of note is an emerging markets fund, £2,100, 3.5% of our portfolio, small loss of 1%, but ultimately it was bought for diversification. Other funds we own an AIM fund, we still own a UK fund, we own a second emerging markets fund, down to our smallest fund, a Russia fund. Somewhat struggled during the last month because of the Russia-Ukraine conflicts. We put £500 in, it's now worth £543. Makes up nearly 1% of our portfolio, but it is still showing a profit of 9% since we bought it, but it has been affected during the last month, obviously, because of situation in Russia and on the border. So a collection of funds, some in profit, some in loss. We were performing very nicely during the last 12 months. We've been hit by sentiment on the last month, as we said, tech stocks down 10%, global equity down 20%, US smaller companies down 10%. But hopefully because of the diversification, it will give us some good months, it will give us bad months, but collectively, it will give us our objectives to make 10% return year on year and meet our investment targets or our year-on total of £80,000. Now moving forward, we do not intend to hold or increase our number of funds, but we will, as we've proved during the past month, we will increase existing holdings when we see good buying opportunities. But all the funds are held for the next 3 to 5 years to meet our investing objectives. Now remember, If you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.